Welcome back to this week's Mortgage Insider Update. Well, as quickly as we got positive news on the jobs front last week, Fed Chairman Powell has pulled the rug out from under the markets once again with a 60-minute interview just on Sunday, basically just reiterating what he said in his press conference, but really going a little deeper and saying that really unlikely for there to be a rate cut come March. That's in the face of multiple reports still ahead of us here for inflation. The fear is to start lowering rates too soon could let inflation bubble up again. But even though 6 to 8 month average of inflation is running right at the Fed's 2% target. So let's see the charts this morning as this week kicks off. So this morning starts off with an alert to lock as mortgage-backed securities start off a little bit higher. As the price goes down on a mortgage-backed security, the interest rate to consumers is actually going up, which we can see in the 10-year Treasury, which we'll dive into first. 10-year Treasury yields have gone back up above 4%. So it's been a seesaw the last week where rates were below and now back above 4%. And not just above 4% a little bit, 4% a lot. So it took us a good solid week to 10 days to get back to the low point we saw on February 1st, only to turn around and have 2 days where just today's not over yet, but we have bounced well above the 200-day and 100-day averages, taking us right back to where we ended January 23rd in the Treasury bond yields. As we go back to mortgage-backed securities, that's bounced up a little bit more, even just as we've set here on the video today. Mortgage-backed securities dropping below the 25-day, now below the 50-day and 100-day averages, looming down below here, the 200-day. So a little bit of room before we get too much uglier, but you can see the price we hit at January 25th, but we've more or less stayed higher. And as the price has gone up, the interest rate to the consumer has been just better and better all the way back to December. So not a lot of good news in mortgage-backed security world. So as February kicks into gear, a little bit higher on interest rates after a little bit of relief. Nothing's going totally bananas. We've just seen these rates before. And as much as we want to see lower rates come sooner, it does look like it's going to be past the March meeting before we get a Federal Reserve rate cut, more likely to either May or even June, depending on the inflation rates as we see the next couple of PCE and CPI reports coming out here this month. Have a great week, and we'll see you next time.